All right, emergency chart stream, KD. Your mic on? I believe you should be fine to speak. I got KD on here live. I'm doing this probably 30, 40-minute stream. We'll do it quick.
I'm on.
What's going on, man? We're going to do it quick so that anybody who missed out, if there's anything pertaining to tomorrow, you'll be able to watch it before market opens or something like that. I just got caught up. Usually I would just do this quickly, edit it, and post it in the chat, but wasn't able to do that tonight. I was caught watching some stuff. So what's good, KD?
What's up, man?
Oh, you're good? All right. Yeah. No, I know I haven't talked to you in a little bit. I know you've been busy, but you got some names you want to look at too. So we can we do that as a bunch. I'll just run through Nasdaq's PA from today real quick, and then if you got some you want to throw out, we'll do. Yes, we got KD here. Yep. All right. So KD, obviously interject anytime you want, but the first thing I'm just going to pull up right now is just from our look at both NASDAQ and the S&P, and then we'll dive down deeper into the PA from today. It wasn't all that great, but so if you take a look here, you will notice that we actually just came up shy of that quarterly discount here. I'm sorry, it's the yearly right now. Let me pull up the quarterly right here. Quarterly discount, we were about 5 points from it. We did not quite get there. If you look at the S&P, we actually did. So we have a little bit of divergence right now. I'm personally in the boat that I think we will ultimately come back here. I'm not saying that's tomorrow, but I'm just a little reluctant at this time, knowing that we still have this down below. And I know at this point we're like 1,500 points above it, but I'm just keeping that in the back of my mind that we did not quite get down into that quarterly imbalance. Okay. So looking at it from the overnight action, okay. In that overnight session, believe it or not, you form a 4-hour imbalance right here. Okay. This is the first one in quite some time that we had formed. Okay. Specifically off of those lows. If we date back all the way to the highs set back in February 18th, you will notice that our range is extremely large. Okay. That technically at 19,389 gets you to discount of that range. Again, I'm not totally sold on that. I know we had this 4-hour imbalance that we got into and rejected off of that phony baloney news, allegedly. But that would be really the mark. I mean, you beat this, then I think you will ultimately get to that 19,389. I'm just a little bit hesitant knowing that we have that quarterly imbalance below. We left relative equal lows behind. But we do have back-to-back 4-hour imbalances. So, not completely ruling out that we get some sort of life here. Now, I think we were very close to a bottom. I would have been super happy if we would have just gotten down into discount of that quarterly prior to the move that we made today. But you don't always get what you want. All right. So last but not least, let's just slide in here and I'll pull up NASDAQ from this point of view and we can go through the price action that we had saw. Really, we can look at it from whatever time frame. We could start wide and then we can narrow in if we want. Okay. So let's just zoom out. This is right now it's on the 1 minute. Let's not do the 1 minute to start. We could just come from an hourly. All right. Okay, here it is again, those relative equal lows that I had mentioned earlier. You created your first imbalance here. Okay, price at 930 ultimately wicks down into that imbalance before rocketing right back up. This is when the alleged fake news about the 90-day delay, blah, blah, blah. Somebody should be investigated for that, but just saying. But anyways, at this point currently, especially now, I do think that we could drop into this 18,361, right? We're not working with any higher time frame imbalance in between from the high of Monday. And we do have that volume imbalance. We gapped up to start this overnight session. So that's what we're working with here. But again, I want to look at exactly the price action that we endured throughout the day. Okay. So you will notice that, again, from that, or I shouldn't even say morning, but pre-market, a little bit of a pump back into that new day open gap that we had right here. Okay. Also your new week open gap. Okay. Price rejects on the first attempt, ultimately retracing back down into discount of that range, got into your hourly bullish imbalance, which also coincides with this 15-minute bullish imbalance. Sweep liquidity in the inverse direction of your overarching trend, run it up, take out these highs to complete Mando model number 1, okay? You'll notice that where we got caught dead in our tracks, right when that rumor was dispelled, ironically, that is after a liquidity sweep into an hourly imbalance. Shocker. It was swift. Ultimately, we're tracing price back down into a 15-minute bullish imbalance here. Okay, price gets into the 15-minute bullish imbalance. You actually had one more test inside this 15, one more retracement back down. So far, so good. And like I said earlier, I think at this point the draw is, from a smaller time frame perspective, this 18,361 and this hourly imbalance. The rest of it, I would deem that showtime. Okay, you get above that, I think you could go see discount of this 4-hour range, a rejection from this point, and we could see more range expansion to the downside. Because again, if you go from a daily perspective, we have yet to form a daily bullish imbalance here. We could very well get into this daily bearish imbalance and reject and continue to expand the range. Okay, so that's kind of just a breakdown on what we had today. It really wasn't anything to ride home about. It was really slow, especially throughout the middle of the day following that initial run up. But grinding higher, I'm just looking left and I'm seeing we've been in this imbalance 17 times already and have yet to fully reject from this point. So like I said earlier, to me, the draw looks a little bit higher just to kick it off. Katie, do you have anything you want to add to any of that? Or
No, I'm good.
All right. So that's really just my quick little shakedown on NASDAQ. Like I said, I wanted to keep it tight. But again, I am a little weary of these. That doesn't necessarily mean that we can't run up into that 4-hour discount, which is here. But I'm just going to be aware, knowing that NASDAQ did not get discounted in that monthly, did not get down into that monthly imbalance. So you have some divergence here. You have the S&P getting into that imbalance down in discount of this quarterly time frame, while you do not necessarily have that from the NASDAQ point of view. Okay, it looks really good, but if you zoom in super close, you're going to see we missed it by about 5 points. Okay, so yes, it is that precise, totally 100%. All right. So I'll leave that there. Katie, we'll start looking at these individual names. Let's talk about Seeker's Favorite Coffee first, and then we can move on to the next. So weak coffee is for the weak, and at Rumble, weak coffee has never been a part of the mission. No fillers, no fraud, and no settling for mediocrity, just like 1775 coffee. It's a single origin, small farm, hand-picked, specialty grade coffee that stands for quality, free speech, and calling out BS when it matters. Forget stale, mass-produced beans, roasted just enough to hide the flaws. Dark roast hits like a Trump tariff. Medium roast keeps it bold without the bitterness, and the Vitality Mushroom Blend, real energy and lasting focus. No synthetic garbage. For K-Cup pods, whole bean, or fresh ground coffee, go to 1775coffee.com. Use code STUDIO for 15% off and start your morning with coffee that stands for something. And for every dollar that you spend, you are entered to win a Cybertruck and $30,000 cash. Okay, that's a mouthful. All right, so let's keep let's keep rolling.
I need to go get that Cybertruck.
Yeah, I'll take the Cybertruck. It's good for the impending apocalypse. So anyways, Katie, you had a couple names you wanted to bring up?
Yeah, so I think I kind of want to talk about this real quick. Is like I think Seeker had mentioned this earlier to me while I was driving into work. But like there was an emergency interest rate meeting by the Fed today, which was interesting, and we haven't heard anything come out of that. Which, look, I'm not saying that we're the biggest proponent of news here, but I'm just saying in general, like I think that could be something that might be on the table if there's chatter about that, and the recent developments that we've had, because that's going to influence volatility if we do get some type of movement in interest rate direction, especially with especially with the violence that we've seen recently. Don't get me wrong, like I think the last time that I was on this stream, Mando and I we were talking about like how some of these trades are really good, they were kind of really set up, but the overall gist was we're just in premium. Like everywhere you look across the board, we're in premium. And the good thing is if you look across the market now, I mean, that is quite the literally flipped on its axis point of view. Like most of the trades that we're going to be looking at right now, they're in discount, or if they're not in discount, they're really close enough to discount where it would make sense that we would just tap that, or at least go down and touch that discount and make that retracement before we actually see higher. So I think that's the theme that I'm presenting from tonight. I could be totally wrong. So, when I say something, I would verify that on the chart and I would trade your portfolio. But from my point of view is we're so damn close. It would make so much more sense if we just took it out. If we take it out, like I think we're going back to all-time highs. I don't really think that there's any reason not to. But that's where I'm approaching tonight.
I agree. Yeah. We're very close. But is that 4-hour imbalance enough to drive us to discount, which, it's about 19. So it's another 1,200 points higher. We got the volatility to do it. I mean, it's a possibility, but I am very torn right now. I don't feel like I have the best edge, or I'm, reading it like a book at this point, especially with relative equal lows, quarterly discount below, just a little sus. And then NVIDIA, which we brought up last night, but NVIDIA and semis as a whole really looks like they could go a little bit lower. So
yeah, I think, Mano, a good place to start off would be, so you did the market indices overview. And we talked about this privately, but I think the one thing that you pointed out, the SMT divergence here between the S&P and the Nasdaq, super important. You have the S&P taking out the low, getting into that quarterly fair value gap. You have NQ just really close there. I mean, what are we off by a couple hundred points? I don't have that in front of me, but
yeah.
So like, I mean, does it have to get into that fair value gap? No. Would it make a lot more sense? Yeah, it makes an easier trade for everybody. Like it actually gives you a clear and definitive bottom. Yeah, it gives you a clear and definitive get in, get out. And I think one of the places to start here is, I mean, to look at some of the NQ names and look at some of the like larger Dow S&P 500 names. I think my personal view take is, and I apologize for being annoying with this, but JP Morgan reports in 4 days for earnings, and I think this is a place to start. I think this gives you a full picture of what I would anticipate, what I'm looking for. So discount, I have on my JP Morgan as 170. I believe it is on the quarterly. Okay, double check that.
Yeah, I have my monthly up. Let me pull up the quarterly. I'm going to just do a separate quarterly chart that's not split. Hold on here.
Yeah.
All right, this is good. And quarterly. Yeah. And we'll go right here and stupid. Here.
Okay.
Clicking all over the place here. JPM. Okay, so yep, earnings, like you said, is this week. Okay. High. Low to high. My range, I got
101. Yeah.
I got my lows starting at 94.98. I got my high at 278.53. I have an imbalance in discount of the range at 175.14.
Yeah.
Yay,
yep.
nay?
Yeah. Yay.
Right here. Okay, so let's scooch this up a little bit. My bad. There it is. Okay, so something like this. Yeah, I think discount. I'm sorry, 179.20.
Yeah, you have your adjustment on.
Yeah, it's off. There we go.
No, I think your adjustment's on.
I flicked it.
Oh, okay.
Yeah. So I have the quarterly imbalance 179.20. That's still far. That's still 21 plus 14, 35 points to the downside still, to get you into discount of that range.
Yeah.
I mean, that's a possibility. I look left. I don't really see anything here that I want to take action on from a quarterly perspective, to be honest. Let's see if anything's differently on the monthly. No, not really, right? Here's a premium bullish imbalance. Wouldn't really expect much of that. You have relative equal lows right off that 50% at 190. You have another imbalance down here, 179.26. What was that mark that we talked about right here? 179.20. Yeah. Okay.
179.07.
So yeah. So
Yeah.
this low here inside of this quarterly or monthly imbalance. I'm sorry. Yeah, it lines up. You got a couple more imbalances down here. For example, this. Whoops. And this. And there's one more little one in there too, right here. Okay.
Yeah.
So yeah, I mean, I'm personally not feeling so hot about this. Preferably, it would be a pretty aggressive downside move, but um, that maybe that's just me. From the weekly, let's see. Okay, so again, this is your weekly range. Our weekly range is getting bombed right now. Okay, here, this is what your quarterly would look like again. Okay, we are discounted from a weekly perspective, but again, we still have multiple levels down below us that we can go get into. And again, that 179 seems to be a recurring theme throughout multiple time frames right now. Bounce kind of makes sense here from that previous imbalance, but yeah, you've had multiple imbalances. See, I mean, this is where it gets a little bit difficult, especially when you look at something from like a, do I actually short this? From a weekly perspective, we are discounted. I'm less inclined to be slapping short on something like this just due to the fact that we are relatively close. And if you go to smaller time frames, we are discounted. This really would have been the move. The first imbalance that was formed here, the retracement into it, and then the rejection down to discount. That move in itself is about $50. But I personally like the speed at which we've got all pretty much gotten down into discount. I know if you look from the higher time frame, banks have not really caught up with NASDAQ or ES, but I think it meets the criteria. I think we're pretty damn close.
So Patilla asked, there's a relative equal low at 120. Is that too much bearishness to imply? Yeah, I would say yeah. No, I mean, this time around, I don't really see it. There's some bigger keys that we would see if we were going to hit 120 on JP Morgan. I would be looking for something else to be happening in the market right now. Like, if we see a retracement and we just neglect to even like if we just knife through some of these imbalances, then I would look to see like lower. But from what we're seeing now, I really like, at least initially. Again, I think it's one of those hard points. Is like on the 4 hour, there are some bullish imbalances. And this is again going to be a repeated theme, but on the 4 hours, there's a bunch of bullish imbalances. The problem is, do you want to, if you have $100,000 or $1,000,000, are you going to bet it on a 4 hour chart? I mean, I wouldn't, but I mean that's just my personal preference.
I'd
But
agree.
I would like to see a little bit more than that, especially when the 4 hour isn't so clean. But vice versa, like okay, so a complete 180 to this is going to be Goldman Sachs. And we could take a look at Goldman, and then we can kind of jump off banks. But I don't want to stick too long on this idea.
Yeah, no, it's fine. Yeah, I just real quick. So here's JPM. This is a breaker, low, high, lower low, break up and through. We would anticipate the high of that sequence to act as a support level. Here's your mix inside the breaker. There's your next run. Here's your discount retracement into a bullish imbalance. There's your run for highs, Manda model complete. Here's your next low up to your high. Here's your discount. Here's your bullish imbalance. There's your run for highs. So really, to see that 120, I think that would potentially be like a setup blow up. I personally don't fall into that camp. I think somewhere in this vicinity is probably your best bet. Again, it gets to a point where you look at some of these companies, and if there were to be setup blow ups on something like a JPM, I think we have much greater problems at hand rather than just a stock market crash. That's just my take, especially JPM. That would be a pretty big miss. Okay, so now next we'll go to Goldman. Okay, so let me just do Goldman really quickly. Okay, turtle soup off of the lows, low, high, lower low, break up and through. We could anticipate the high of that sequence to act as a support level moving forward. That is your bullish breaker. Let's just pull this. Again, this is all from a quarterly right now, just to be aware. Here is your high or low to your high. Here's your discount right off of 50%. Here is your bullish fair value gap. And let me just confirm that it looks perfectly off 50. Let's confirm it. 278.50, 277.84. Beautiful. Okay. So we got into discount and we made the run. Okay. And now here's your next price run from your lows up to your highs. We are currently discounted on Goldman, believe it or not. You have
Hmm.
a bullish imbalance here at 437 to 419. That would be your first quarterly imbalance. Your lower of the two gets you down to 372. What are your thoughts there, KD?
Agreed. Yeah, I think like again, a gun to my head. If you had to ask me which one I would long right now, Goldman Sachs would be the answer. J.P. Morgan just it looks like a little lower as possible. Not saying you
Yep.
shouldn't, but if I had to, Goldman is the bank that I would be choosing here. Again, bias though, I'm gonna prefer to buy JPM just because as a company wise, I'd rather have J.P. Morgan, the one and only true big bank. Um, and Goldman's great, but I just biased towards J.P. Morgan there. But as far as the chart perspective, Goldman's in discount, J.P. Morgan's still in premium.
Yep.
Goldman has a better chart than there.
I would agree
Goldman,
with that. Yeah. JPM is a
Go,
little sketch with here I'm going to split them right now, but J I think JPM is a little bit more sketch. Uh and also just question, when do they all report Friday? What's the deal with these?
yeah. So J.P. Morgan is going to report on Friday. Goldman reports on Monday.
Yeah. So do we get that initial move here from JPM, bring you to discount, also get that flush on Goldman to bring you here for the earnings Monday to give you the Sendy? I
Yeah.
was going to say which one comes first. So yeah, I wouldn't rule that out either. Um, And of course, we could also look just throughout the week how we're performing. If we're strong throughout the week with no midweek retracement, no Tuesday high of week, you're looking at what could potentially be like a TGIF to the downside. If you have a strong weekly candle over the first 4 days, you could get that 20% retracement on that Friday move, like we've seen just in the opposite direction over the last couple of weeks.
Yeah, yeah, and again, I told I'm gonna tell everybody on stream here, like I have not been keeping up with weekly profiles, and I probably need to honestly revisit them and restudy them. But if again, gun to my head, I would say we probably look like we have a Tuesday high of week. It just from like from perspective of all these charts, it would clean up so much that the Tuesday high of week would be where I'd want to be and see the rest of the week kind of teeter lower. That doesn't.
Right.
It's not gonna. That's not gonna blow up setups. It's actually gonna make the setups better. And the name of the game for us is to buy the cheapest thing we can because the cheaper we buy shit, the more money we make. Well, when we see a retracement here.
Truth. Yeah, and I'm pulling up Wells Fargo as well. Wells Fargo did hit discount, and it does have the bullish imbalance. Again, this to me is, you know, did we hit 50%? Yes. Just in terms of like
Uh,
weighing the risk reward, to me, Goldman
uh,
is also a little bit better than Wells
I don't.
Fargo.
I don't know. If,
You have the
not.
what's that?
Yeah. No, I said I'm not sure if I'm a fan of. Like yeah, we got the discount sweep, but I'm not a fan of buying a premium Fair Value Gap.
Yeah, that's the thing, right? We're still in premium. Now, this is not necessarily saying we can't run this back higher. It's just when I weigh them against the two, and I know Goldman's a little bit more expensive, but I personally like this setup just a little bit better than this one, and JPM as well. But and again, even Goldman's not really where I want it. Like I would want it here, still another like $28 lower. So we'll see. We got pretty close, but not close enough in my estimation. So what else? What else you got, KD?
Yeah, I don't want to belabor this too much longer, but like if we look at
Yeah,
Morgan
you're good.
Stanley, Morgan
Yeah,
Stanley,
yeah.
just pull it up on the monthly. Just this is the only thing we need to flash. And
Whoa.
this is one where you guys have seen me like when I was joined, I think in 22, and the Mando's Discord. I was like slapping this and like telling everybody like, yo, this is probably a really good long here. But I am not a fan of any of these lows here. Specifically,
Either.
the 90 73 low. Morgan Stanley, again, as far as market cap perspective, is the number three largest bank in the United States. I would not touch this until it gets back to 90 73. Full disclosure, I sold my position out at 135 or 132 ish. So, I don't have a position anymore. So, um, you guys can take with that what you will. But yeah, 90 73 is where I would take this, or this would be somewhat interesting. But I don't know if I would actually hold on to that.
I'm not. Yeah, I don't really like this as much either. If
Yeah.
anything, I think Goldman's probably the best out of all of these. Here's your first run. That's in 2015. Here's your next run. This is into uh, COVID here. Discount bullish imbalance. There's the run. We actually didn't get discounted inside of that bear market run from 2022. So we have a big ass range here with a couple quarterly equal lows. Yeah, this is like scary actually.
Mhm.
That's up to like $65. Holy shit. Yeah, definitely not really a fan here, to be honest. So that is
Yeah.
Morgan Stanley.
Yeah. And then I think, see, that one's, yeah, I think, yeah, we can stop. Thanks. The other one I would look at is
Yeah.
oil. I mean, there's Capital One, but Capital One, you're going to get pretty much the same exact viewpoint. But I think the other one is oil, which,
Yeah, we'll pull up which in particular you want to look at.
let's look at oil as a whole. I'm looking at the per barrel price because I'm gonna make my justifications for oil based off the barrel price.
Sure.
And let's see.
What is this? You want WTI or you want
Yeah, whatever you usually use, you can use
yeah,
CL.
I
Doesn't matter.
did
Doesn't
I
matter.
did WTI. I'll put CL right next to it. I don't even know if there's any difference or what, but we'll look at it regardless.
What one's
Um
futures is one's
Pretty
futures,
close.
and the other one's that I actually don't remember. Hold on, I just gotta let my
Yeah,
dog out.
futures versus West Texas Instrument. Yeah, I mean it's basically exactly the same. But here, there you go. Okay, so that's what we're looking at. Yeah, we're pretty close to a quarterly imbalance here. You actually have back to back. Now I'm just curious to see is there a yearly imbalance here? Let's just see. I'm not so sure. We're actually below the yearly imbalance. Wow, on crude, and we're rejecting a bearish. Now, see, here's the thing. I don't anticipate a negative here ever again. So, and that's pretty scary. Let's just see, because WTI actually we didn't go negative on that. So, yeah, we are currently below the yearly fair value gap, believe it or not, which is pretty intense. Um, but we shifted structure. We are discounted. Realistically, I guess the important thing, I know we have 8 months left, but closing above 65 would be pretty important, I think, from that perspective. So it wouldn't be surprised if we were to get into this 57.49 range and start to move it a little bit. But I think we're pretty close there.
Yeah, and the same thing. Mike, the justification I have here is I would love to see the price per barrel hit 57.65. I'm not asking for too much, just $4. $4 would clean it up. Most of the move has already been made here, and so like
Mhm.
just really just cleaning. It's all about cleaning up these charts. Not every chart is going to look pretty. You know, some of them are going to look ugly, and that should be a red flag to say, hey, don't put your money here. Otherwise, you know, if you have to pick heads or tails, and it's like, oh, I could be up $1,000 or down $1,000, and you're probably looking at a wrong chart. Like it's the stock market for a reason. If you're not entirely sold on what you're looking at, go find something else.
Would agree. Yeah. But yeah, I think right now it's relatively clear. I mean, we were inside range for how long here on oil? Jeez. 2022. We finally broke these relative equal lows.
Yeah.
So, all right. So that's a little oil breakdown there. What else you got?
Let's see. We can shift over to something else. We did Meta last night. You want to go through some of the semi names? I know we
Yeah,
covered.
yeah, we can do that.
Yeah, I know you covered Nvidia, but I think it's worth just mentioning, clearing it up, giving
Yeah.
an overview of that.
Yep. There's Nvidia. I mean, look, that would be amazing. I would still personally want that, but um, there's one thing that I'm nervous about. The one thing that I'm nervous about is that we kick the can and we take forever to ultimately satisfy some of these lows. Like that's why I kind of want it to happen faster than not. But that would be amazing in my opinion.
Yeah, I think again, this is bringing the news into it, but it is kind of funny because you know sometimes there's laughable things that happen in the news, and if do you have can you go to the ES chart you all have at the end? The,
ES.
yeah, to the left, all the way to the left on your charts. Yeah, the one is that your lower time frame ES on the top left
No,
of your chart.
Oh. You want me to go lower time frame? Sure.
Well, I was just gonna say in general. So, like one of the things that is getting thrown around right now is Trump was talking about instituting more tariffs on China, which is kind of funny because those who were in the market or around the market in 2018 will remember the volatility that you got with the Trump China tariff trade wars in 2018.
Yeah.
And so that was like a narrative that was thrown around to just drive drive prices lower. Like, oh, Trump is doing bad. Look at this. He hates China. All these trade wars. One of the things you'll see like in that 2018 time period was like this ridiculous move down, and that was like the narrative that was kind of attributed to that.
This
Yeah,
discount
yeah.
retracement bullish imbalance. Yep.
Yep, yep. And so like
Three
the
months.
narrative, and the narrative behind that was the Trump tariff trade war or trade wars with China. And I'm like, okay, dude, sure, whatever. It doesn't really matter. But point being is that's also something that's being assigned now. I think Trump said something about April 9th or something like that, that they're putting 25% more tariffs on China. China responds and says,
Yes.
China responds and said, if you're going to do that, we're going to do it more. I mean, if you look at everything, I mean, everyone's kind of bending to the king right now. It looks like if we saw like 50 plus countries, but yeah, I'm not saying to follow the news. I'm just saying, you know, it's interesting. That's all I'll say. And they need a
Yeah.
narrative. They need a narrative for everything. So
Yeah. I
otherwise,
mean, the China situation, and to me, is much more deep than what you have with a lot of these other countries. Also, like you're working on, you have a TikTok deal that's going about. You obviously want to keep them kind of at bay and not invade Taiwan, because to me, an invasion of Taiwan is pretty much the end. Eh, Honestly, we don't have semiconductors. We have nothing. So that's why. I mean, I know that it's been like an area of focus to bring what was it, TSM to
I
back to the U.S. to do some manufacturing here, but um,
think
yeah,
it's a good
not good.
think it's a good segue to look at TSM because even the quarterly on TSM, it still has a little bit to go.
Yeah, and I mean, you also look at it this way too. It's like really like, without the U.S., is there China? Without China, is there the U.S. in terms of or just ultimately creating like global powerhouses? Like, I'm not so sure. I think it's like a mutual benefit, to both be on good terms. But again, we're going down a slippery slope here. But so what others semis wise?
TSM.
I'm gonna pull it up on this right side here.
Yeah, so TSM
Whoa, baby.
you'll see the 133.57 relative equal lows. And that's like the highlight to really look at here. Um, but there is quite a bit of a range if I have this. Let's see, just want to
I
remark
see.
this.
Okay, yeah. So we did get discounted, but we did not get into the discounted imbalance. That's at 124.42. So
Yes. Yep.
yeah.
So
So it just like kind of as you could see, anybody who's watching, it's kind of all falling into the same envelope, that a lot of these names, it looks like they do have a little bit lower. So that's why I'm not, banging the table just yet. Even in the post that I had last night, a little bit
oh
of a
man,
calming post, but I didn't think it
you
was just over just yet.
you have your adjusters on.
Oh, whoops here. Okay. Yeah. So what's
There you
that
go.
imbalance here is, whoops, 125.78.
Yeah, yeah, I have 125.48. Close, close.
Yep, close enough.
Yeah.
So yeah, that area here, it's just the next discounted imbalance for us right there. So, um, all right, what else? Any others?
Let's see.
Keeping an eye on this Natty Championship also here.
I forgot to turn that on. Seeker had me watching the Florida versus uh,
Houston.
No, no, Houston and Duke, and then Houston won that. It was Florida versus some other team, but yo, that end of the game was nuts. I was watching that; it was crazy.
Eh,
Um, Delta Darren asked, "Would you give us a breakdown of IWM or Russell 2K?"
sure. Let's do IWM. All right. So IWM, personally, let's just zoom this sucker out a little bit. Okay. This is highly unlikely. I think you also had the imbalance here as well. So let's just map this out from the get go. This is back in 2002. Low up to your high. Here's your discount retracement into a bullish imbalance. There's your run for highs. That would be completion numero uno. This is more of a yearly splurge, but low, high, discount, inverse fair value gap. Not something I would particularly be banging the table about, but you get your next run. Amanda model complete. Your next low, high, discount, bullish imbalance right here. Run for highs. That's the completion. That's back in 2012. Okay, here's your next. We actually left relative equal lows. That's a little scary, but low, high, 93 on Russell would be crazy, but I doubt that. Your next run, here's your next what we are currently operating inside of. Oh boy. Low, high, discount, bullish imbalance, run. So yeah, this is what we're working with right now. To me at this point, 161 seems pretty realistic. From a quarterly perspective, I think I just need to do this really quickly and look from a yearly perspective too. But um, yeah, the yearly doesn't blow up. Okay, that's good. Yeah. So the yearly actually does not blow up with this move. So I think 161 sounds reasonable.
Yeah,
What do you think, EJ?
I agree. Yo, I'm just gonna make a little joke out of this. I'm still waiting for small cap summer. Uh, there's
Yeah,
a few
small
people
cap summer was what was that? 2022,
that might have been 2021. I don't know, man.
21, I think. Yeah, small cap summer just like literally never happened. Yeah, literally. I mean, dude, like this is the COVID move. Yeah,
Uh,
I mean, I guess you can make an argument that small cap winter of January 23, 2 years after, and the wrong season. But yeah, that's a nice move.
yeah,
But yeah, I think right now I look left. I see an order block. I'm not really interested in that. Volume imbalance has already been caught. I think we can go chase this low. Um, that would be
yeah.
preferable, I believe.
There's still a little bit of juice left in this. The bullish fair value gap that was created 10 or sorry, yeah, 10/1/22 that October. So,
Oh wow, we have that many people who were around in 2021. Wow, a lot of people remember the small cap summer thing.
oh, dude,
Wow.
that was hilarious. I mean, yeah, she was doing like memes. She was like, I'm not gonna say who it
Uh,
was, but there was like some things that were getting flashed on the TV screen or the Twitter screen. So,
I think she made a podcast about it.
oh yeah, 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 yeah. That was
Uh,
funny, yo. She was like touring different companies, like the shittiest companies ever, but it was still like, oh my god. Uh,
MP.
yeah. Oh
That
my
was
god.
it, I think.
Yeah. No, that was one of them, and then it was like, then it was 3D because it was DDD because she was looking at 3D and she was talking about her double Ds, and I'm gonna get you fired. Thank God we're on Rumble.
We're on Rumble. I mean, we're on YouTube too, but it's all right. No, it don't
Yeah,
matter. I
yeah,
don't care. But yeah, so what was the other one? DDD, and then
yeah.
we'll
3Ds.
see. You have any others off the top? Oh
Let's
boy.
see. You don't need to belabor too much. Yeah, yeah. There's not much left.
Whoops. There you go. Yeah. So, all right. Let me just see in the chat really quickly and small crap summer. Yeah, that's for sure. Yeah, that never really caught
Yeah,
any love in there.
yeah. Chat's loving that one,
Um,
but there's like a few names that I love, but like that's besides the point. They're mid caps. Tractor Supply Company looks pretty good. Just needs a little bit more retracement here. but I'm not going to kill you guys with some mid caps. I'm looking at the quarterly perspective here.
Tractor Supply.
Yeah.
Yeah,
So
that's
your range
yikes.
is 37 to 61. Oh, whoa, wait. Oh God, never mind. Oh, I was looking
Yeah,
at wait.
I got 1278.
Oof.
How many times
Yeah.
did this split? Yeah, I mean, this has had some splits, just to be fair. Um,
Yeah.
there
Yeah.
is a premium imbalance here, just worth noting. Now, again, it's premium. It's automatically going to make this a little bit
Oof.
lower probability, but um,
Yeah.
oh my
That,
gosh, 3 drives on this would be brutal. That would
yes.
get you down below that 34 or
Yeah.
not 33. Wow, Florida won.
Nice. Let's go. I wanted to go to Florida. I never applied, but I wanted to go. Mm,
It's down to the swamp.
Different story. Let's see. Tesla's got a little bit. 212 gets you into that quarterly.
Yeah, Tesla's close. I think Tesla actually wicked it overnight. I'm not sure. Used the strategy for the first time as a test run. Absolutely loved it. Yeah, just be careful because there are some stipulations. Like, for example, like that setup, it's gonna play the Manda model, but when you have higher time frame working in confluence with your smaller time frame idea, it's gonna work much better. Right? Like that's the thing. There's how do I put this? This goes for anything. I don't care what style you're trading or strategy you're trading, but if your smaller time frame setup's not running in confluence with your higher time frame framework, you might run into some trouble. That's all. That's all I'll say about that. It's like the whole like fighting the trend thing. Like that's literally what it means, right? They
Yeah,
won't
I
tell
mean,
you that. They'll just
there's
say,
some.
"Oh no, it's green. Don't short the green." I made that assessment yesterday. It's like sometimes buying that red candle inside a bullish imbalance and discount is the best buy. Sometimes shorting that green boner candle that we saw today on the 4-hour time frame was the best bet you were going to get, right? So I don't think you could rule it out. I mean, look, the trading that we had to deal with today, just to be fair, the range was absolutely enormous. So if you didn't feel comfortable trading today, I would say uh, definitely don't sweat that. I mean, look from this is inside market hours, 673 up to a high of 18361. So we almost worked within 2,000 points today. So that does not happen very often. So if you were uncomfortable by that risk, I think that means you probably actually have risk tolerance or some sort of risk parameters, which is a good thing.
Yeah, I was
All
talking
right.
about this with Seeker. Like just looking at the cash for this, the S&P or SPY. Like SPY was working within a 42 point range, which is gnarly for the S&P
Oh
500
yeah,
would
we're talking about an ETF.
yeah, we're talking about an ETF. It hit like a low of 478 all the way up to 420 or 520. I was like, God dang.
Yeah. And
Yeah.
there's that
So
more little SMT between the indices right now. Yeah, that's why I personally just don't have the best read of this. Like, I could probably give you 3 pretty good paths for short-term trading, and I think you'd be like, "Oh, yeah, that makes sense." And that's a problem. When I can give you 3 pretty good, trade theses, or I don't even know how the fuck you say that, but, um, thesi, I can give you 3 of them that seem pretty, like sound pretty good at least. Here's the first. Okay. We run up and take buy side, complete the lower time frame Mando model from this 18361. We sweep that liquidity. Ultimately, that would get you or it'll get you pretty damn close, I should say. That would get you pretty damn close to your smaller time frame range here. This dates back to last Wednesday's high down to the low that we just previously formed. That is not a higher time frame range, but sweep this high and then from that point roll it over. I think that would be completely fair. I think you could also say by beating this level here, and creating the imbalance in the process. It's not a daily imbalance. That's why I don't really find this favorable. But we get a continued run to get us into this imbalance here, which is in discount of your higher time frame daily price run from your high here down to your low here. 50% is 19,352. I do not really favor that, to be honest with you, but that is something that I definitely think could happen. And then I think probably what I would deem the lowest probability would just be like, these are the lows and we're gone. If that were to happen, I think that leaves us susceptible to a more drawn out move, which to me would stink. I really wanted like a V-shaped recovery, to be honest. Let's just say, for example, we leave this as is, ultimately throughout the rest of this month, just kind of chilling out inside of this range that we've established. Following month, get up into this monthly bearish imbalance. From that point, because we did not get discounted, I would be pretty open to some rejection in May to get you down here, which would stink. That just kicks the can down the road. So hopefully that doesn't happen. Could happen, but I hope not.
Yeah, yeah, and I think again, I think that that's a good point to point out. There is like, we want this to be fast. The longer you sit around here, the worse it is going to be. You don't want to kick the can down the road. The fact that we got this much acceleration this quickly is fantastic for
Yeah.
the people getting back to a really fun tradable market. You don't have to be like short all the time. You don't have to be long all the time, but just making the trades and the setups easier would be if we actually made these moves that we're talking about tonight.
Yeah. Kind of like the last tariff time, like you brought up earlier. It was a great point. 2018. 1, 2, 3 months of dog water gets you into that discount, and then all is well. I do not want something like this. I do not want 2022. Not that it's not tradable, not that you can't make money throughout, but this is a long time of drawdown. And realistically, think about this. These candles are 1 month, right? Just think about the overall movement inside of the month and ultimately where price open and close. You really don't have much range to this. So that to me would be pretty brutal. If you look at it from this point of view, we're almost into discount. ES already got its discount. So I think it would be fair for you to say, all right, well, discount has been satisfied. Obviously, to me, having both of them get into discount together would be much better, but maybe that's just me. I don't know. That's why I was just hoping that today we'd roll over, go get them, and then we can move on. But
Yeah, yeah. The longer we sit here and consolidate, the worse. Like the worse the outcome is. Um,
I'd agree.
and I think Palantir is a good example of like I don't know if Palantir will get to the where we've been targeting. Like I wanted to ideally take out the its relative equal lows that it has. I mean that's the biggest problem that I have with this. It's
63.
so this one, yeah, 63 on the monthly. Let's see.
I still think it's gonna. It's a monthly candle, so it could really take some time, which would be
Yeah,
also ass. Just time
yeah,
associated with it, really. I mean, let's just see something real quick. That's the thing. I mean, it's just like there's still like multiple bearish imbalances here. We actually got into a volume imbalance today on this. You got a couple more, like 10 points higher. That's the thing. The range is so big. So it's like, even if you have like a kind of like in my camp where you're like, okay, I think we can go a little bit lower, but at what cost? Are we going to rip 1,000 points prior to that? You can't really
yeah.
trade that, right? You can't trade that idea as much. So that's why it's like, to me, this is like a much higher time frame trade taking place, but it's not all of that tradable from a higher time frame based on the size of the range, right? It's like I have to go down to smaller time frames to try and operate inside of this. So, but
The Red Owl made a funny over here. He's said a lot of shorts got ran over with that move today. Yeah, I
oh,
mean
big time.
the Sunday narrative was limit down, be prepared. Like and they were the big not the Big Short. They were talking about like calling the traders in early at 6 or 5 a.m. to start talking about you know how the market was. All right, buddy, cool. And guess what?
Right.
Market still continues. Uh, can you just do me one favor? Flash ES and just go
Oh,
to like a 1 year time frame.
yearly. All right, let's do it.
Well, yeah, just pull ES to a 1 year.
All
How
right,
many times? How many times have they told you the market's dying? And then up and to the right, up and to
quite a
the right.
bit. Yeah,
Yeah.
yeah. This
Uh,
yearly range is a little sus too. Imagine we get a yearly discount. That's 34.25.
yeah, that would be rough.
That would be pretty bad. That would be a lot of setup
But
busters there for sure.
but we would see that beforehand because on the yearly time frame, like a break below 4,000 is clear and indicative that we are going to 34. We were on the quarterly,
Great.
and in that quarterly range on the ES is really indicative of. So you would see that beforehand.
That's true. That is true. Yeah, 41,119.
Yeah, yeah.
Yeah, that would,
If you see that get lost, yeah, I mean that's where the yearly is gonna.
that would be major issue. I don't think it's gonna get like that,
Yeah.
but all right, dude. I'm gonna shut it down here.
Yep.
Um, thanks for coming on. Thanks for everybody stuck around. I know it's late, but figured to do something. I was just a little busy before, so I wasn't able to get to this. But all right, I will catch everybody next time. We'll be on for live trading tomorrow. Again, expectations relatively low, but we'll see what we get. So
All right, man.
I'll catch
Thanks for the invite.
everybody. You got it, man. Anytime. All right, I'll see you. When you're ready to stop playing the lottery and actually learn how to do this, come on over to Galaxy Trading for thousands of hours of educational content, weekly class sessions, live trading, and a kick-ass group of traders. The best part? Actual timestamps and receipts of our work. Once you see it, you can't unsee it, and you'll never go back to the way you're trading right now. See you soon.